Hey guys, this is Mr. Roxy coming at you live from Palm Beach in Florida. It is Monday. It is March the 14th. And first of all, I got to take a little bit of time and issue a retraction because I gave you guys some incorrect information. Not in the last video, because the last video was kind of like an analysis on Oxy. And the question was, should you buy Oxy on Monday at $58? And the answer to that was probably no, but it's easy in hindsight, more difficult to predict. But what I did was not this last video, which was should you buy Oxy at $58 on Monday, but the one before that, which was the clash of the titans, where I talked a little bit about Buffett and Icahn and Larry Fink, BlackRock, etc. A number of people reminded me that BlackRock is a fund, and the buys of the ETF do not necessarily reflect the opinion of the founder or the owner or the CEO, Larry Fink. And I agree. I think the reverse is also true, that Larry Fink, or the opposite might be true, and Larry Fink does represent the opinions and the views of BlackRock, the company. So if he says we should not be investing in fossil fuels, we should be investing in renewable energy, then arguably he could just take the elevator down a couple of floors and tell his traders not to buy a particular stock, and that would be the end of that. However, I often say that your comments are more interesting and certainly more entertaining and also more educational, in addition to correcting me, than my videos. So just a couple of comments that I wanted to share with you. The first one, a very good comment here from Steve Allen, who says, if you look at the 13G from the other day, Buffett really slowed down on Thursday and Friday as the stock crossed $58 per share. This is getting him close to the 15% threshold of commons that trigger board action. With his 83.9 million warrants exercised, he would control over 21% of the company. That is a huge chunk and would make him a major shareholder, a long shot away from the next major shareholder, who is probably Dodge and Cox. It's starting to look like he wants to buy the entire company. At 30% free cash flow, there is still some meat on the bone, even with the debt. I hope they don't let him steal it. So, of course, we don't know what will happen. But Steve, thanks for that comment. That's a really good comment. I do want to take you up here to Kevin Zhao, who obviously is a regular contributor and someone I like listening to, because he was one of the first guys to say, "Hey, I'm going all in on Oxy warrants as opposed to Oxy commons." But what he did was reminded me here not to necessarily rely on fake news, and shame on me, not only relying on the fake news, but even sharing it as if it's real, and with specific reference there to CNN Business. But let's take a look at what Kevin says. He says, I think Oxy and Oxy warrants still a great buy for people who are planning to hold it for 2 to 3 years. Kind of agree. I'm not too sure I wanted to buy it at $58, but maybe, if it gets down to 50 or dips below 50, who knows? I might take another little nibble and add to my existing position. Obviously, I'm long with a few thousand commons. I don't have any warrants. In regards to the BlackRock Fund Advisor recent 13G, Kevin is making reference here to my recent video that I posted with bad information. I think they might not have made any purchases recently. He's talking about BlackRock. On CNN Business, it shows that they only owed 4.79 originally. But when you look at other platforms, in other words, better platforms, like Yahoo Finance, NASDAQ, Guru Focus, they all show BlackRock owns approximately 6.4% as of the previous quarter end, which was December 31st, which is aligned with the recent 13G. So I jumped in there too quickly. And usually for me as a fundamentalist guy, I need time. So if I jump in on the news and I'm too fast on the draw in terms of sharing news with you, you should always question me, because there's a good chance that I'm making an error if I get into the news too quickly and try to interpret it without spending at least a little bit of quality time investigating what it is that I'm talking about. So please forgive me if I misled you there or gave you some wrong information based on what I was reading from CNN. So a quick look at the markets here. Everything is red today. Pretty much everything is red, but here's crude oil down quite a bit. $6.24. It's almost 6% today, down to about $103. Just a week ago, we were edging up to 130. Now we're down to 103. It's not as if Russia is suddenly back in the market selling oil. It's not as if Iran has suddenly headed there 4 or 5 million barrels per day to the supply side of the equation. So there's no particular reason for this. I know that Biden has been talking about releasing some more oil from the Strategic Petroleum Reserve. At the end of the day, the amount of oil that they release is worth maybe a day or so of impact to the market. Even 60 million barrels, which they talked about, in the general scheme of things, with consumption running at about 100 million barrels per day, 60 million barrels is like a half a day's worth of oil. So it's not really material, and you can't do it every day either. So, you can only do it once every now and then. Oxy today trading at about $55, so it's down from that high of nearly $58 when it closed on Friday, down $2.50 right now. And you can see it's kind of bouncing around $55.50 as we speak. Pretty much everything is red, right? We see the sort of traditional stores of value, including gold here on the far right, down more than 1% as well. Silver down 3% today. Even incredible stores of value like Bitcoin down a little bit today, trading at $38. Now, of course, if you bought Bitcoin at $68,000, then this picture doesn't look too good. But on the other hand, if you bought Bitcoin for $3.80 10 years ago, you probably feel really, really good right now when you look at the value of your portfolio. Anyway, this is Oxy today. Let's go a little window deeper into this. So this is still with Yahoo Finance. Occidental Petroleum might provide a new buying opportunity even after Buffett's purchase, right? So this is Stefan Kalinick reporting here. This is today, as of this morning. And he's basically saying some analysts compare oil to tobacco in the 1990s. Despite all the studies showing that smoking damages health, tobacco companies continue doing just fine, outperforming and returning value to shareholders. The situation isn't much different in the 2020s, except this time, the culprit is the world's energy addiction that cannot be changed on a whim. Therefore, it is not surprising that institutional investors like Warren Buffett are pouring billions of dollars into the oil industry and taking a significant stake in Occidental Petroleum. I'm not going to read the whole article. It's a relatively short one. You can find it on Yahoo if you want. On Yahoo Finance, Occidental Petroleum might provide a new buying opportunity even after Buffett's purchase. Now, many of you have asked, should I get in at this price? Now, of course, there's no way I could possibly even try to answer that because I don't know anything about you. I've mentioned this many times before, right? No one, especially some guy on YouTube like me, can give you advice in terms of how much you should invest and when you should invest and when you should exit and all that kind of stuff. The reason for that, just simply, quite honestly, is that there's no way someone like me knows much about you, right? In fact, there's a really good chance I know nothing about you in terms of your age, your earnings, your timelines, so what your investment objectives are. There's so many questions that I can't answer. So there's no way I could possibly go there. What I do want to share with you is this. So here I'm going to NASDAQ. I'm just going to spend a couple of minutes here because I just want to talk about this just briefly. So this is Berkshire Hathaway's buys, but this is already more than a week old, right? So we're looking at March the 2nd, 3rd, and 4th when he was buying. And you can see 14, 12, 33, 30, 34 million shares traded. You can see his prices there just sort of off the edge of the screen. Let me just drag this across a little bit. You can see the prices that he purchased at. So just over a week ago, Uncle Warren was buying Oxy sort of in the $47 range. And currently, even though it's trading at $55 and it's down $3 from the $58 high last Friday, $58 would have been up more than $10 per share, multiplied by all this big chunk of shares here. That is a lot of money to make in 1 week. But when you're an institutional investor and you're investing billions of dollars, this is arguably a rounding error. What about on the other side of the equation? And I'm going to share this with you. And I don't mean this critically at all. In fact, Carl Icahn is one of my most favorite people of all time. But I do want to share this with you just to make you, if nothing else, feel a little bit better. So many of you who've been following me or been following Oxy or been following Carl Icahn for some time will remember that last year in April, Carl Icahn said he was rebalancing and he sold a little bit of Occidental in terms of what his current holdings were at that point in time. Now, a few shares that he sold here, so we got 3.5 and 3.5, that's 7 plus 5 is 12, 14, 15 million shares. In April last year, Icahn sold 15 million shares, and let's say that the average price was, let's call it what, $26. So we say 15 million shares, 1, 2, 3 times 26 bucks equals, he sold those shares and he generated approximately $400 million in cash after he exited that position, right? So $390,000, but he sold the shares at around, let's say, just to make it really, really easy, at $27. And let's make it even easier and say Occidental today is trading at $54. So Carl Icahn sold 15 million shares for 27 bucks, which means he cashed out $390 million. And if he had sold it like today at $54 per share, he would have made an extra $390 million, which is almost $400,000. So in the space of 1 year, almost, because this was last April, if Icahn, in theory, had held on to his position for, an extra 12 months or so, he would have generated an extra $400 million just from that particular one tranche of sales. There is no way to time the market. There's no way you can predict which way stocks are going. I thought for quite some time that Oxy is very much linked to the price of crude, and specifically WTI, because there have been many days where WTI spiked and Oxy spiked with it. But then there were many days when WTI spiked and Oxy pulled back. So then you go like, okay, how does this work exactly? Or how doesn't it work? And the other way around, there have been a few days, not too many, where WTI has actually pulled back and Oxy went up. Now, of course, recently we had a huge spike in Oxy, and we can attribute that to two things, really. Firstly, the spike in WTI that took us over $100 on the futures price. We're now trading April 22nd futures at around $100 plus. That's the first thing, and obviously the most significant material change in terms of Oxy spike. And then the more recent spike has been the buys, right? So we saw people like, in this particular instance, Berkshire Hathaway, jump in, boots and all, and just gobble up Oxy as if it's the best thing to hit the market since sliced bread. Now, at the same time, of course, Carl Icahn exited his position, but he still owns approximately, I'm not too sure about this, Wild Saddle said about 15 million warrants. I thought it's about 18 million warrants. If you have better information, you can help me out here, because otherwise I might accidentally look at CNN Money again and give you the wrong information. But anyway, Warren Buffett has been buying stock. Carl Icahn exited his common stock position, but he still holds his warrants. Where's Oxy going? I don't know. It's currently at 55 bucks. In the previous video, I shared that many analysts are saying it's going down to $50. That's the sort of fair market value, including from Morningstar. Maybe it goes there, maybe it doesn't. Who knows, right? There's no way to predict this thing. All you can do is say to yourself, this is what I'm prepared to invest. This is what I'm prepared to lose. These are my investment objectives. If I reach those objectives, I'm going to take some cash off the table, assuming it's positive, right? Or it could be negative. You say, I'm buying it at $50. If it goes down to 45, I'm exiting. I'm not prepared to lose more than 10%. That's a strategy too. For me, it's the other way around. I shared with you in a couple of videos recently that I took some money off the table when Oxy was at 52. By doing that, I sold my most expensive stock and effectively reduced my cost basis down to like next to nothing. And in addition to that, banked a little bit of profit, cashed out, took some profit, which is taxable income now. And, I'll find something else to do with that money, allocate it to a different stock, donate some to charity. As you know, my family and I have a charitable foundation. So maybe the money can go there and then benefit people who are less fortunate than what we are. But in the meantime, Oxy, much like the market, is going to be bouncing up and down for a while longer. And I hope whatever your strategy is, it works well for you and you make tons of money. make a good profit. Enjoy. Take care. So talk to you later. Bye-bye.